Hello, everybody. How honored we are today to have with us someone who really knows what in the world is going on, been there, done that, and keeps going forward with it. A real woman of dignity, grace, honor, and puts her money where her mind is. Lynette Zang. Ms. Zang, thank you so much for being here. And I'm up in Kingston, New York, and Lynette has a history over here. Tell us a little bit about that, Lynette.
Well, I grew up in Kingston. That's where I started my banking career, right around the corner from your building. And I used to come and get melon and cottage cheese for lunch. But my father was a developer there. So, yeah, I spent definitely 17 years there till I went away to college. Yeah. And then I left. But lots of nostalgia when I go back. So that was fun. I so appreciate you calling me back there, because you're probably about the only person that could get me back there. but it's fun. It really is a lot of fun. Though I'm glad I'm out in Arizona now, to be honest with you.
Yeah. Well, Kingston's changed a lot. Now when the COVID war began, according to Bloomberg, out of 181 cities, more people moved up here in the first several months than percentage-wise than anywhere else in the country. So now it's filled with a lot of young New York. They call themselves New Yorkers. Of course, they're not, but they were living in New York, and they're coming up here. And so I see a lot of young people with babies and carriages now. So it's a whole different place. And so I want to thank you for being on. And, when it comes to the economy and what in the world is going on, you have a great view of it and a lot of insight. So, the Federal Reserve is going to be raising interest rates, as the word comes out, some 25 basis points. And then the European Union, they're going to raise interest rates. The European Central Bank, they're expected to raise them either 25 or 50 basis points.
Right.
So what do you see going on and the implications of what they'll be doing?
Well, I think everybody can see what's happening with the regional banks with, 15 years of zero interest rate policy. So all these banks piled into all of these treasuries and put out mortgages, put out loans. And, they would be valued if it was zero. Can I have a pen, please? Thank you. Okay. So interest rates, current market value, right? So they come out at zero interest rates, and then they go in globally. Central banks are in a major tightening where they're raising rates pretty aggressively. And what happens to the market value of those assets? They've plummeted. So there are all of these losses that are on their books. And, and what we're seeing is a complete breakdown of the global financial system, but we're only seeing the little bitty tip. And look at what's happening in the treasury bond market, unthinkable things on the short term, with traders betting on default coming up as early as June. And so they got us into this problem with all their wonderful money printing, because that's all they really have, right? And now we're seeing the foundations of the system that they created absolutely crumble.
Well, you mentioned zero interest rates, and let's go back, Lynette, to the COVID war when it began in January 2020. Out of China, in celebration of their Chinese Lunar New Year, the Year of the Rat. The markets and the economy should have crashed, but didn't happen because you mentioned the zero interest rate policy in the United States. And of course, over in Europe, for 8 years, negative interest rate policy.
Right.
And then, hey, stay home. Don't worry about it. Close down your business. Here's some money. Countless trillions. The number goes between 6 and 8 trillion that the government dumped in this phony money.
Mm-hmm.
They created a bubble, the likes of which we've never seen before. You saw the housing market, housing prices went up, 40% in 3 years?
Oh, yeah. Maybe even more than that in some places, more than that even.
But we're not going to put that number into the inflation number. We're going to cook it. We're going to, so we're going to rig the numbers so the inflation numbers come a lot lower. And let's not forget, for over 2 years, the Federal Reserve and the ECB was saying, no, there's no inflation. It's only temporary. It's only transitory. So now what they're saying is the reason, and I'm not making this up, everybody could look it up. Don't listen to what Lynette said or what I say. The reason for higher interest rates and the reason they're raising, the reason for inflation and the reason they keep raising interest rates are because wages are going up. And we have to slow down the economy and put more of the plantation workers of Slavelandia that are making not enough money to survive now out of work.
Yeah. Well, did you see what the Bank of England, one of their economists came out and said, get used to it. You're poorer. Stop asking for wage hikes. He was probably more honest than so many of the others. But sure, inflation has nothing to do with all the money printing. And look at the corporate profits. And when you listen to these guys coming out on the earnings call, like Procter & Gamble came out and said, yes, I mean, how much have you heard? The consumer is really strong in here. We raised our prices 10%.
Yep.
The corporations completely took advantage of the inflation and pushed that higher. And let's not talk about CEO pay and all of those compensations that they're getting, what, 1,000, 3,000 times what the average worker is making. So, but none of that is inflationary. It's just when the boots on the ground person wants to ask for more money because their cost of living has exploded. And you've got people earning up to $250,000 a year, living paycheck to paycheck. And let's not even talk about the retirement crisis.
You know, you mentioned also that, where we're in a complete global meltdown or worse to that effect. And when we're talking about the banking sector, when the COVID war began, we're trend forecasters. So we give you trends analysis and trend forecasts of the current events forming future trends. And we said, again, let's go back to when it happened in 2020, January. In February, the virus hit America. Now, where did it hit? Kirkland, Washington. Yeah, it hit a bunch of old age homes up there, and it killed people that were dying anyway. And what happened? That guy Dorsey, that freaky guy that used to own Twitter, that looks like something out of a Mad magazine. Yep, there he is. I mean, look at this guy. This guy is the first to cancel his trip going to South Africa and telling people to stay home. All his workers. And then that Zuckerberg and that Pichai, Google, Facebook, Microsoft, all the big tech companies, go home. Go home, you'll be safe. Go home, don't come to work. And their stocks skyrocketed as everybody started shopping online, living online, can't go out to restaurants, got to order food, pick it up. They thrived. They did a great job in San Francisco. The office vacancy rate, not the occupancy rate, the vacancy rate is around 30%. You walk down the streets, you want to see homeless? Hey, you need any fentanyl? Get you all you want. There's an office building bust that has been created by these lockdowns and people working from home. According to Castle Systems, that's with a K, the office occupancy rate of the 10 largest cities in America is at 49.6%. So all the businesses that depended on commuters, all these big office buildings that are now vacant or hardly occupied, and they got to pay their loans. Oh, they have these floating loans, they call them of some kind. They're very short-term loans that float. Oh, and interest rates have gone up, and now they have to pay more on them. So what do you see happening with this?
Well, I see that this is a huge shoe to drop. Nordstrom just announced that they're leaving their 300,000 square foot key mall. So in San Francisco, so it's going to get worse. But how do you think that's going to impact the regional banks? Because it's a lot of those regional banks that have put that money into that commercial real estate. And, the mom and pop, I'm sorry to say, those that have managed by some miracle to survive Amazon coming out unfairly. I mean, it's always, this game is so rigged. It's absolutely disgusting. But commercial real estate is definitely a big key to fall. And again, it's on a global basis.
Yep.
And we need this huge crisis to cover up the garbage that the central banks are doing and attempting to convert us into a CBDC so that they can control every move that we make. That's why when you're talking about gold and silver, physical in your possession, you've got to have it outside of the system. And that's not going so well, which is really interesting to me that people are not adopting the CBDCs as easily as the central bankers want to. But I think, commercial real estate is definitely a shoe that is dropping and has been dropping. And it's quite interesting to see what community banks will actually survive, or will it all just become the great big JP Morgan owns everything?
That's what's happening as well. And again, when you go back to the office building bust, as we call it, one of our top trends, you're looking at the fact that they were overbuilt before this happened.
Absolutely.
There were too many before this happened. And there's going to be a crisis, and the numbers that they're coming out with just in office buildings is about $5 trillion worth of loans. And as you mentioned, it's the small and medium banks that have them. So the bigs will get bigger.
Exactly.
And you just saw what happened with JP Morgan Chase buying up First Republic. Oh, JP Morgan Chase, convicted of 5 felonies. Oh, one of them, you know a thing or two about precious metals. Mm-hmm. Oh, they rigged the precious metals market?
Shocker.
Oh, they only got fined $900 million for that.
Yeah. The fines are just a cost of doing business. Nobody goes to jail with this. And they had to change the rules so that JP Morgan could buy First Republic, but they had to protect those uninsured deposits that, $30 billion that those 11 banks put into First Republic.
Yeah.
Right? So because the reality is the FDIC has no money. They have no money. They had to go borrow money from the Fed, went and borrowed money from the Treasury so it doesn't go to our debt limit, to loan it to the FDIC $148 billion when they only had $128 billion in their fund. And that was one bank. So, that's why they took them over, because now that never came out of the FDIC. Although what I could not find, maybe you've been able to find it, but I have not been able to find what the terms of that deal is. So you know how sweet it is.
A great site to go to that I find great banking information is Wall Street on Parade.
Yes.
Russ and Pam Martins, they do a terrific job. And they put a lot of these details in there, plus the $50 billion that the FDIC is guaranteeing JP Morgan Chase. So again, it's one big club and we ain't in it. It's a crime syndicate. And and again, this is why, we don't give financial advice. We have no advertisements in the Trends Journal. And I am very bullish on gold. And I had called the bottom of gold in September of 2022. Mm-hmm. And here's the story as I see it, and I'd like your feedback and see what you think. The Federal Reserve, we're going to find out they're either going to put a pause on interest rates, or maybe they might raise them another 25 basis points. We don't know at this point as we're having this conversation. But as they do all the time, they lower them in the run-up to the presidential elections. They do it all the time. They lower interest rates to boost up the people in power, because the people in power are in power and they don't want to lose it. When that happens, the dollar is going to go down. The dollar's already lost 8% since it hit the high back in September of 2022. This is the death of the dollar.
Oh, yes.
The world has had enough of the United States geopolitical and socioeconomic hegemony. And they're all talking about abandoning the dollar. The dollar is strong because interest rates are so high. When they start lowering interest rates, the dollar is going to go down. And I believe gold prices and silver prices are going to spike.
You know, I'm glad you brought that up. And the reason why I'm laughing is because it's just like a big act. So, oh, if we pay you interest, then of course, what value does gold have? Gold does not have to pay you interest because it's the safest thing that you can do. It's the only financial asset that has zero counterparty risk. So what you're really, talking about is the dollar against other fiat currencies. But the reality is every single one of them has virtually no purchasing power value left. That's why we have to go to CBDCs. We have to go to a new system. And the tools that the central banks use to regulate the rate and speed of the inflation, which was built into the system at conception, are money printing and the interest rates. And to your point, they raise them to really try and, hey, implode the economy. They're getting what they want.
Oh, yeah.
They're getting what they want. But is the dollar really strong? No fiat currencies are really strong, and they're robbing you. So if you keep your wealth, I always like to say we vote with our wallets. We vote with our purses. So if you buy stocks or bonds or hold that garbage or annuities or any of those intangible Wall Street products, that's your vote. And your vote is to allow them to rob you conveniently for them. For me, I vote with this. By the way, because this is my vote, as is food, water, energy, security, barterability, wealth preservation, community, and shelter. And by the way, this past weekend, we put in the start of the kitchen orchard and the production orchard. So I'm really happy about that because I had a lot of long storage food in my bug out house, but I didn't have any, growing food. So Lindsay's been planting out the hot houses and now the trees are in. So I feel a lot better because I don't know how much time we have.
Nah.
Nobody does.
The time is running. Well, two things. You keep mentioning the CBDCs.
Yeah.
And the reality is, we just heard from the head of the International Monetary Fund, that CBDCs are going to be here. Whether the people don't like it, but it's going to happen.
Who cares what you want?
Because what they're going to do, they're going to come up, make up a story. The Russians hacked the banking system or whatever, and we have to come out with a new currency. But don't worry about it; you get your money back. They want to know every penny that we spent, where we spent it, what we spent it on, so they could get all the tax dollars they could get from us, know everything that we're doing, and make more money off us through the big corporations as they give them all the data that they have all about us. So they're going to be doing this. This is going to happen.
Right.
And it's just a matter of time, as I see it.
So how do we protect it? You put your money outside of the system. That's the only way to do it. And you set yourself up to be as independent and self-sufficient inside of community. Community is, in my opinion, the single most important thing, because one person cannot do it, but together we are a whole lot stronger than we would otherwise be. But I'm not dependent upon the system. If everything shuts down tomorrow, I'm good. I've got food, water, energy, security, barterability, wealth preservation, community, and shelter. I've got all those key elements to sustain a reasonable standard of living. And you and your sister are always invited, by the way, Jerry.
Thank you. You
You
know,
know,
you could do all you want, and it's great what you're doing, but there's another little thing going on right now. Uh, it was just reported that a drone strike hit the Kremlin,
right.
and they're trying to assassinate Putin. Huh. I was out with somebody that was reported on Wednesday. It happened on Tuesday. I was out with someone who's very connected for lunch on Sunday. And he said to me, "Gee, we just found out that a drone strike hit the Kremlin. They're trying to assassinate Putin." This is Sunday. I said, "I didn't hear anything about this." I said, "I go to TASS, RT, Sputnik. I go all over." He said, "It happened." I said, "It's not." He said, "I'm telling you, it happened. Somebody told me this on Sunday. It was reported on Wednesday."
Yeah.
So you have all of these things going on. One of my sayings, only by the facts, is that when all else fails, they take you to war.
100%.
What followed the Great Depression? Oh, World War II. What followed the dot-com bust? Oh, the war on terror. Right now, Biden's, according to Gallup, his poll ratings are at the lowest ever. When all else fails, they take you to war. Suppose we were doing this interview and we talked about a drone strike on the White House. Oh my God! Oh! Drone strike on the Kremlin, who gives a damn?
Right.
They're going to get us. I am very concerned, as is Scott Ritter and a number of others, of a nuclear exchange. And we have to understand that we have maniacal, evil people in charge.
Yes, that's a fact.
God bless America. What God blesses wars? What God are you talking about? World War II isn't ancient history.
Nope.
World War I is not ancient history.
Nope.
Europe was destroyed, countless scores of millions of people killed, cities demolished, and we have the same maniacal people, just a different generation in charge now. And as I see it, if we don't have peace, which is very profitable, we're going to be engulfed in a serious war where no matter where you are and what you got, life isn't going to be worth living.
Well, I hope you're wrong about that very last piece, that life is going to be worth living, because I'm really doing my best to create a lot of fun up there too.
I know, but you know, if there's nuclear explosions in the air, it ain't going to be fun.
No, it is not going to be fun. However, trees do help clean the air.
Yeah.
They do. And I think we'll have a minute, because somebody asked me when the regional banks started blowing up, how come I didn't go to my bug out location? And it's because the public needs to understand what's happening. I understand what's happening, and I'm only 2 hours away. So I'm in a very close, I can get there, and I have a bunch of different ways. You know, if it's in the air, there's probably not anything that I'm going to be able to do about it. And I do agree with you. War is something that 100% of the time comes with currency regime shifts. Yep. And, you know, World War I was that what, 1914? And when was the Fed coming into power? 1913. Yep. So do you think it's a coincidence that the era of perpetual central banking, because with the Fed, that was the first time it was ever a perpetual charter? Do you think it's a coincidence? Ron Paul said this. So I'm not going to be to the word, but he said something like, it's not a coincidence that the perpetual charters on central banks coincide with perpetual wars.
Yep.
Because, you know, I did a study on that, and you can see the time between wars grow shorter and shorter and shorter until 1989. We've been in a perpetual state of war which has justified a lot of things. And, the other thing that's really interesting that you said, because peace is very profitable, war destroys wealth, because there are two kinds of debt. There is self-liquidating debt. And so in peacetime, a business owner borrows money, expands the business, and that business then repays that debt, versus all of the debt that the U.S. has taken on to build bombs or this equipment. Look at what they left in Afghanistan, right? That is non-self-liquidating debt. And that's really what that difference is. But it's hiding what's really happening, which is this transition of wealth away from the masses.
Oh, yeah.
And this consolidation of power, to your point, where the same guys, I think what they're trying to do right now is engineer a controlled demolition. And we have to have a big enough crisis for people to be freaked out enough to accept the CBDCs, the next things that they want to cram down our throats.
Yep.
If you're dependent on them, what choices are you going to have? You won't have any. No choices. If you're independent of them, you have more choices. You can help retain your freedom.
Look, I agree with you 100%. My first buy of gold was $187.50 an ounce back in the late 70s. And I've been buying it since. And I tell, what do you do with it? I said, you buy it and you put it away. You buy it and you put it away. Buy it and you put it away. You buy it and you put it away. Buy it, put it away. And then when you get old, you got all this, that the prices have gone up. Have they gone up as if you were gambling in the stock market? Well, if you're really a big guy gambling in the stock market and a member of the club, yeah, it would have beat gold by, many percent. But if you're a regular person playing the markets, you're playing a rough gamble. So to me, gold is the number one safe haven asset. And Lynette, I want to thank you so much. By the way, you said I said peace is profitable, and you said war destroys what? What did you say?
War destroys wealth because it's non-self-liquidating debt. You blow up a bomb, you making any money from blowing up that bomb? No. I mean, It's really a very interesting concept on debt. It's like, it used to be, okay, maybe you would take out debt to get an education, then your education, you could make more money, right? But these days, we've been transitioned into credit debt, right? So you go out and you buy a blouse. What value does that blouse have once you take it out of the store? None. So that's non-self-liquidating debt versus self-liquidating debt. In peacetime, you can grow a business. So if you do take on debt, you can repay that debt with added earnings. But no, they don't want you to do that either. They just want you to be in debt and be subject to the system so they can control you.
As I say, we've just become plantation workers on the global plantation of Slavelandia. When you and I were young people, there were drugstores, grocery stores, stationery stores, hardware stores, all gone. Chains. The chains control everything, and they've chained us really good.
Oh,
and that's why you need to get your own freedom. So thank you very much, Lynette. Great being with you, and let's do it again soon.
Absolutely, Gerald, always.